Hi. This video is going to be a bit different. We're going to talk about something that isn't clinical but is still very much a responsibility that you're going to have to learn to get used to. For the first time probably in your life, you'll be earning a regular salary once you graduate as a doctor. And it's useful to know what that's made up of, how your responsibilities work, and how your tax and your repayment of student loans or your pension contributions will be factored into the way that you're paid every month. This is an area that's missing from medical education in the same way that it's missing from most areas of mainstream education, and it isn't something that you'll be prepared for, so it's worth considering in advance of when you graduate. It's important to say that this video is going to be focusing mostly on the numbers and the scales for pay and tax in Scotland. That's because it's a system that we're used to. The way that your pay works and that you are taxed is slightly different if you are out with Scotland, so in England, Wales or Northern Ireland. We'll leave a link to the documentation below this video that highlights what the pay scales are and what the tax bands are. The principles are otherwise mostly the same, even though the percentages are sometimes a little bit different. So I'm hoping to cover what you'll earn and what that's made up of and how it's influenced, how you'll be taxed on that income, what your pension scheme is going to look like, and some of the tricks that you should know about, like deducting business-related expenses. A fairly unique part of working for the public sector, like the NHS or other public sector employees like teachers and the fire service, are that everything about your pay scales and what you're entitled to is freely available on the internet. There are no secrets, and it's not a competitive market, so you'll be treated the same as anybody else who's new in that job role. You can literally Google your pay scale and you'll find out exactly what you can expect to earn. These numbers come from the national pay circulars, which are updated every year as the pay rates and the scales and the figures for each banding level are reviewed annually in light of the public budget, and this is usually to factor in the cost of living increase with RPI. If you have a look online then, your first year salary for a Foundation House officer year one is £25,691. There is a great likelihood that you'll actually earn more than that because the Scottish junior doctor contract still works on the basis of a banding system. What banding means is that depending on how many hours a week you work on average and what percentage of those hours are deemed antisocial, that is out with 9 to 5 Monday to Friday, will influence whether you are paid an additional supplement in recognition of the extra hours worked and the impact on your life. All of these rotas need to be compliant with the European Working Time Directive, which means you can't work more than 48 hours per week, but that's averaged over 26 weeks. So you will have weeks where you're working more than 48 hours, and that will be the case for the rest of your career. The idea is you have to have 0-hour days, which are given to you later down the line in lieu, and that brings down your average. So you'll get time off that isn't annual leave, it's just there to keep you compliant. At the basic level of banding, if you're only working a small amount of antisocial hours, you may get a 20% supplement. From 20%, the next step up is 40%. You can get 40% for simply working a weekend per month, so you don't need a huge amount of out of hours to start incurring banding. A very significant number of jobs in Foundation Year 1 are 50% banded, and this is usually because of the component of night shift, bringing your out of hours percentage right up very quickly. I can more or less guarantee that if you work night shift, you will be getting a 50% supplementation. There are very few FY1 jobs that are unbanded. That only really happens if you're in a specialty where you need extra postgraduate training before you can be on the on-call rota. Think of laboratory-based specialties or anaesthetics where you need to have additional competencies. Most people will be 40 or 50% banded. It really is quite as simple as taking 25,691 and multiplying it by 1.5 to calculate what your actual salary would be. Your banding supplement should be made known to you before you start your role. The amount of banding that you're entitled to is regularly reviewed by a process called monitoring, and this will be handled by your junior doctor's HR team. Generally speaking, twice a year you can expect to have to log all of the shifts that you do over a 2-week period, and they'll recalculate your banding to make sure that you're compliant with the European Working Time Directive and the trust isn't misusing your time. The main purpose of monitoring is actually to ensure compliance and look after your safety, but it is the best place to get the numbers that allow them to work out your banding supplement. If at any point you're working a non-compliant rota where you either don't get enough rest or you're working too many hours per week or too many days in a row, there is a punitive rate which is to discourage the trust from running rotas in such a manner. You may find that you get back pay of additional banding that is due to you if you've been working a non-compliant rota for a couple of months before monitoring happens. An important thing to note about banding is that it is not pensionable. So you have a basic rate of salary, which is the number that you'll see on the BMA website or on the pay and conditions circulars. Banding is additional to that. So if you're calculating what you expect to have net of tax, national insurance, and pension contributions each month, ignore your banding for the purposes of your pension. So what deductions can you expect to have out of your pay? Well, as I've mentioned, banding isn't pensionable, but your basic amount of pay is pensionable. And again, this is something that you can Google to have a look at what the rates of contribution are, because they do change from time to time. As it stands, in Scotland, you can probably expect to be contributing 7.1% of your basic pay per year to the pension scheme. The percentage contribution does increase as you increase your earnings, so by the time you're a few years into your training, that will probably increase to 9.3%. Another deduction that you'll see coming off your payslip may be a student loan repayment. If you have an outstanding student loan, any earnings over £25,000 a year will be repaid at 9% of the remaining income. The next deductions will be your national insurance and your income tax. These are different between the nations, but the income tax is by far the largest deduction that you'll see. This is a band system, so everyone has a personal allowance, and they can earn that much without incurring any liability for income tax. The personal allowance in Scotland is currently £12,570, so you can earn that much without incurring any tax. The good news is, because you are starting your job in August, but the financial year actually runs from April to the end of March, you are several months into the financial year before you earn any money. Once you've earned over that threshold, there are sequential bands which are at the side of the screen. Remember that these are marginal rates, so it's not the case that once you're earning 14,000 you have to pay 19% of everything. You only pay the percentage illustrated on the earnings that are between the two band cut-offs that are shown. These bands also change annually, so from now on what happens in the budget every year is going to be of interest to you, and it may have implications for your take-home pay. The bands are very much different between Scotland and England. We have some additional rates, we have a starter rate, and we reach a higher rate much lower than in England. National insurance is another contribution that you'll have to pay to the government every month. The idea of this is that it accrues you years in the state pension scheme. There's no way to opt out of this. If you're earning over the threshold, it will be deducted automatically from your pay, as will your income tax. Rates for this also change annually. There's a link to the latest documentation about that below this video as well. In the majority of cases, all of this is going to be deducted automatically from your pay without you having to do anything. But it is worth reviewing it at the end of the year because mistakes can happen. You can get calculators online. There's one called the UK Salary Calc that's pretty self-explanatory. Although bear in mind that whenever you're using one of these calculators, you'll have to put your banding in as non-pensionable additional income. If you put everything in as the gross number, then it'll tell you that you need to put more into your pension scheme than you really do. Because remember, your banding isn't pensionable. A small number of FY1s may need to undertake self-assessment every year. It's overwhelmingly likely that if you're in that category you'll already know about it, but for example, if you have other income that means you're being paid by two different sources, you will probably have to self-assess that to figure out exactly what you owe. If that other income or any investment income puts you above the threshold for repaying child benefit, if that's something that you claim, then you have to self-assess as soon as you're within that category. If you have other investment income, you may find that you've breached the threshold. So now that you're employed on a regular basis by a regular trust, have a look into self-assessment criteria and make sure that you don't fulfill any of them. Most people won't. You probably will within a few years of working. So we'll talk a bit about your pension scheme. Now, the NHS pension scheme was overhauled in 2015. It used to be a final salary scheme, but now it's not. It's a career averaged earnings scheme. So for every year that you work in the NHS, 1/54th of your pensionable pay for that year is added to the amount that you'll get when you retire. Now, you only get that full amount if you wait until the normal retirement age, which is ever creeping up the way. But the idea is you will put a percentage of your money that you have earned that month aside, your employer will put a percentage aside, that goes into a pot to fund a central pension service, and you have a defined benefit. So you don't have a pot of money with your name on it, you have built up an entitlement to a certain amount per year, every year after your retirement, based on your years of service and what you've earned along the way. Your income will increase dramatically across the years that you're a doctor, from FY1 to whenever you finish your training. So your early years count for much less than your years later down the line, but the sooner you start accruing years in service, the better. And there are other reasons to be in the scheme as well. Not only are you accruing a pension for your retirement every year that you're in the scheme from day one, but there is also a death in service amount for your next of kin or for any dependents. If something catastrophic was to happen to you in your early years of training and you were to pass away whilst employed by the NHS, twice your annual pensionable salary would be payable to your estate, which would hopefully help to tide over any costs incurred and leave some peace of mind for your loved ones. You can opt out of this scheme, but it's advisable not to. It is still one of the best schemes that are out there and far surpasses what you would get in the private sector. You probably will have heard some debate in the media recently about the lifetime allowance and about annual allowances catching doctors. This is something that really applied to consultants who were in the scheme before the 2015 overhaul. It used to be the case that whatever your final salary was, 1/82nd or 84th of that was your final pensionable amount, and therefore if you had a big jump in your income any one year, the final amount that you were entitled to would increase considerably. So relatively small extra amounts of income could put you into a whole other tax bracket. For a career averaged earning scheme at the beginning of your career, this isn't something you need to worry about, but it's worth considering 10, 15 years from now. One thing that will be applicable to you from the very beginning of your career is locum work. So you'll have a regular day job and you'll have contracted hours on a rota, but sometimes shortages come up. People get unwell, people have to move, things happen that mean your ward is without cover, and you may be asked to do additional work. For this, you will be paid an hourly rate. It will be calculated from your basic hourly rate, which again, you can Google. These change every year and are linked to your point on the salary scale. Some trusts have their own arrangements. Generally speaking, however, trusts will have agreed a rate for FY1, a rate for FY2, a rate for core, a rate for lower and higher specialty trainees. Any work that is done in addition to your basic rotated hours to cover sickness or short-term gaps is locum work, and you should expect to be able to fill in a locum form and have this added to your pay sometimes the same month, usually the month after by the time it's been through processing. This isn't pensionable, but it will incur NI and it will incur income tax. So your actual final amount in your payslip will not look like the gross amount that you think you've earned hour by hour. So what are tax deductible expenses and how do they work? Well, there was a ruling a number of years ago where a dermatology trainee took HMRC to court, effectively, saying that because exams for your training are a requirement of your post, they are effectively a cost that you incur as a result of your employment, and there's no way to get around it, and that therefore you should be able to deduct that from your gross salary in terms of working out what your profit for the year is. If you were a limited company or you were running an organisation, if you were purchasing things that were required to function, then those costs would be offset against your income and you'd only pay tax on your profits. So as a pay-as-you-earn employee, you're somewhat disadvantaged if your employment costs you anything. There is a fix for this. If you have to self-assess due to any of the reasons that we discussed earlier, you can put your employment expenses on your self-assessment each year, and that will then reduce the gross amount you are considered to have earned. So say you made £50,000 one year when you were a registrar, but you had to spend £1,000 on exams, well now you'd only owe tax as if you'd earned £49,000. So you would save your marginal rate of the amount that you had deducted. It's not millions, but it does make a difference and it certainly adds up. Medical training is expensive. For example, your stethoscope is tax deductible because you require it for work. Your licensing with the GMC, your membership to the BMA, any professional body who is on the HMRC approved list, link below, will be tax deductible. How do you do this? There is a form that you can download from HMRC, fill in and return, and it will then be factored into your end of year calculation, and you will generally receive a cheque as a refund for your first year. After that, the extra amount will be incorporated into your tax code. Bear in mind your subscription rates will change year on year. Your tax code will always be a year behind. This is why it's absolutely essential to sit down with a list of everything you've spent each year and your P60, which is your end of year earnings summary from your employer, and figure out whether the tax you've paid is right and whether HMRC owes you a refund. The form you want is a P87. It's titled Income Tax Relief from Employment Expenses. The HMRC have a full list of what you can include on this. If you're at all unsure, it's actually quite easy to phone them up, talk them through it. If you've only got one item, sometimes they'll let you just declare it over the phone. I hope that's helpful. If you've got any ideas about things that we should have included in this, then reach out to us on social media. We'll have our tags at the end of this video. This is an area that's always changing and has always been a complex area for junior doctors to navigate, as with any new workers who are just entering the workforce for the first time.